Welcome back, everyone, to another leverage trading educational video in my PrimeXBT leverage trading series. Today, we're going to talk about why you shouldn't short a boring market and basically how to get good short entries. But first, quick shout out to PrimeXBT for sponsoring all of this free content for you guys. They also do have a great exchange that I've been using for a little over a year now. They just added a ton of altcoin pairings, so it's been great to use lately for altcoins. And if you use my link below with the code, you can also get $7,000 deposit bonus. So make sure you guys check that out. They've made a lot of improvements to the exchange, so I'm really happy with how they've progressed over the last year or so. But anyway, let's get into the content now. We're going to talk about why you shouldn't short a boring market because a lot of people get shaken out of shorts. They short too early, the market pops, they close, or they get stopped out, or even worse, liquidated. Hopefully not. But then the market goes in the direction that they thought it was going to go. So let's just zoom in here, okay? And you can see here we got a nice little drop here. All right, and everyone and their mom wants to short, and even chase a short down here. And you could see how that didn't work out very well, right? And again, same thing here. Little boring sideways action, pops up, sells off. And then over here, we've just got all this sideways boring. And this is actually where everyone got extremely bullish. But again, we're boring, we're sideways. Market pops up. This is the time to short, and now it goes down. So accumulating shorts in these downward, like at the bottoms, is never a good idea. After drops is never a good idea. Yes, it can work. Okay. But again, this isn't even really that boring. It's not much sideways. It just continues to drop. But even here, you can see if you're trying to short this boring action, and you're probably going to get stopped out. And there was even one last stop out up here. Okay. So you want to short the pops. You want to get good entry, and then you can hopefully hold for, the drop after you've had good entry. Otherwise, you're otherwise you're shorting down here at these levels at the lower extremities at the lower legs of Bitcoin. At the lower extremes. All right. You're shorting at the lower extremes of these zones, and then you're getting stopped out. So why does this happen? All right. Well, what happens is people don't buy with the intention to sell, right? People aren't just going to, if people are buying down here, you got to get them to sell. You've got to figure out how to get people to sell. So right here, we had panic selling down to support. And now sellers have run dry. There's no sellers here. And you can see that there's just going sideways, right? Because there's not really any buyers here, but there's no sellers. So how do we force sellers? Well, you get price to go up higher and then get everyone to FOMO lower. And what basically happens is you get people, you'll get people basically either have accumulated higher and are ready to sell the pops, or people will start accumulating these lows because price isn't moving, and then they'll sell their accumulated Bitcoin higher to people that FOMO. And so how that works is, let's just say I'm going to just buy, at support down here, price isn't going anywhere. I'm going to buy like 500 Bitcoin, right? And it's just going sideways, and over the span of, a week, I buy 500 Bitcoin down at this level, okay? And now there's not really been any sellers, and price is being pushed up, and what happens? People start to FOMO buy, because anybody that panic sold here, or anybody that's like, oh, we're going lower, I'll buy lower, starts to get FOMO, and they say, oh shit, we're not going lower, we're gonna moon, oh god dang it, I should have gotten in, okay? And the higher you go, the more that this induces the FOMO. So you get up here, and you've got all these people FOMOing, and everyone's like, oh man, I missed it, I missed the pump, we're going to the moon, whatever, yada yada. And now, I had my 500 Bitcoin. Well, I just sold all that 500 Bitcoin on somebody, okay? And then somebody else sells all their Bitcoin that they had accumulated. And then you've got traders who are selling up here. And now all those people that bought up here and FOMO bought up here are now trapped. And price is down here. And now we have sellers, right? So now we have forced sellers by all these people that just FOMO bought. Now they're going to panic sell. They panic sell, pushes price lower. Now that price is going lower, people that were accumulating here that hadn't sold yet are getting stopped out, or people that took trades are getting stopped out, right? people that were trying to hold for longer period and much higher. And then now they start to sell, all right, and then it creates more panic. And then people that weren't planning on selling are like, oh, shoot, I've got to sell now because it's going too low, right? And so that just produces a trickle-down effect. And basically all these people that there was nobody selling here, right? No, but we couldn't get people to sell here. We get them to buy up here, all right? And now they become sellers down here. Isn't that crazy how that works? So all these people that are reluctant to buy now, they FOMO up top. Price drops so fast that they're now forced to panic sell where they didn't want to buy in the first place. So it's kind of crazy how the market works like that. But anytime I see price going sideways for an extended period of time, even if I think price is going to go lower for, in the long term, it's never really a good idea to short in the near term. Even like GMT is a great example here. You could see that we had this nice initial drop, and then price just goes sideways, right? So all these people FOMOing into shorts here are completely, screwed when price pops up here and it drops back down again. So you really, even if you think price is going to go lower, people have to have a reason to sell. Why? So people sold here, people had a reason to sell, and it stopped, and the selling stopped. Anybody buying down here isn't just going to be like, oh, it's going sideways for 2 days, I'm just going to sell, right? Now, maybe a couple people will, but overall, you need a majority of people to start selling. You need them to panic. You need to force selling. So either a news event by, let's say the GMT was like, oh, our app is broken. Sorry, guys, you're screwed. Then obviously that would dump, right? But otherwise, people have no reason to sell. People are still bullish on the project. Not very many people are underwater, right? So people start accumulating, people start buying, then the FOMO kicks in. And after the FOMO kicks in, you get all these people that FOMO'd up here to sell down here, and what happens? And now you start to go lower because all these people that were comfortable here, or maybe had got in down here and were in profit, now they start taking profit, and it just creates this whole trickle-down effect, right? So now, if you start losing this area, right, because you have a lot of people that have bought here, if all these people start to get underwater, what's going to happen? Price will start to go down again, right? So, really basic example, you guys, of why you shouldn't short a boring market, kind of how it actually works and like the psychology of it. So I hope that put a clear picture for you guys. I'll always say it. I say it all the time on Twitter. Never short a boring market. If you want to FOMO short, it's not the best idea to do it after a big drop. You might miss the move, okay? Let's say this just kept selling off. It drops. You really want to short. You never hear it pop and it keeps selling off. That's fine. Let it happen. You're not going to catch every single move, but more times than not, waiting for some sort of a pop to get in on a short position anyway is going to be your best bet. And that's probably one of the reasons why I'm so successful at shorting, is because I don't do it at the lows. I don't chase shorts. I'm never going to chase shorts because the power of FOMO buying is real. But the power of panic selling is also real. And people FOMO buy at the top, they will panic sell just as quick, and that's the best time to get short entries. So I really hope you guys enjoyed this video and found it useful, and I will catch you all next time. Please make sure to thumbs up, leave a comment if there's any other topics you want me to cover, and I will catch you guys next time. Peace.